American multinational investment bank and financial services company, Morgan Stanley, continues to maintain its overweight rating for Nvidia. Morgan Stanley puts Nvidia's target price in the next 1 year at $150. At the same time, another American financial giant, JPMorgan Chase, puts Nvidia's target price at $155 for the same period. At the moment, Nvidia is trading at $128. Looks like the institutional target price is not very far away. Today, the markets were mostly flat, except for the energy sector, but Nvidia grew by as much as $3 per share, or 2.5%. This valuation falls in line with CEO Jensen Huang's recent statement that there is an insane demand for Nvidia's Blackwell next-generation superchips. There has been a little delay over the last few months in producing the Blackwell chips, but they are in full production now. If you have missed the information, Blackwell is the latest, fastest, and most powerful AI chip ever developed by Nvidia. Now, what is an overweight rating? Generally, an overweight rating indicates that an analyst believes a stock will outperform a market benchmark, its peers, or the overall market over the next 6 to 12 months. What that means in the context of Nvidia is that at the current market price, Nvidia offers better value for money than other stocks. It also means that investors may invest more money in Nvidia than in other stocks within their portfolio. For example, if you allocate 10% of your portfolio to Nvidia, it may be a good idea for you to allocate more funds to it, increasing its percentage within your portfolio. In other words, you may concentrate in Nvidia for a better return on your investment than any other stock within your portfolio. Getting an overweight rating from a financial analyst is a positive sign for a stock. A rating agency, in this case, Morgan Stanley and JPMorgan Chase, comes up with a rating based on their comprehensive research on a stock. They put their reputation on the line. They know that many investors, some of whom are their clients, will act upon their ratings. They do not want to lose their clients' business. They do not want to compromise their goodwill as a reliable source of information. That is why, when they talk with a margin of safety. As an investor, you have to understand that margin of safety. Nvidia's overweight rating means as a company, it is on the right track. It generates income, and it will grow further in the future, which means, in simple terms, its share price will increase with time. Instead of saying, buy Nvidia shares, they categorically say, Nvidia is overweight. Analysts decide or modify their ratings, taking into consideration a company's new products or services, any FDA approvals, any new business deals or grants or awards, and even when and if a company is appreciating when the entire sector or industry is depreciating. In this case, JPMorgan and Morgan Stanley must have taken into account the revenue Nvidia will generate from its new product, the Blackwell GPUs. However, overweight ratings do not indicate by what percentage points should you increase your holdings of Nvidia within your portfolio. They also do not indicate how the stock will do if you are in it for a long time. At the same time, it also fails to suggest what may happen to a stock if a new situation arises, if a stock faces a better competitor in the market, and if the geopolitics within which it operates changes. Before strengthening your position in Nvidia, it is always a good idea to proceed with caution. Understand your investor profile, analyze your expectations from Nvidia, and especially how long you want to remain invested in Nvidia. Sometimes the market can correct your mistakes provided you are in it for a long term. If you are interested in Nvidia, you may watch this video on Nvidia's future. As the title suggests, I discuss different market valuations of Nvidia to find out at what price the stock might trade in 2030. I discuss Nvidia's intrinsic value, discounted cash flow, or DCF, price-earnings ratio, price-to-sales ratio, and analysts' ratings from various agencies to reach my conclusions. I truly believe you will like the video.